How's it going, everyone? This video is going to cover order blocks, how I identify them, and how I use them in my trading. The first thing we're going to do is how I identify them, and then we will go through examples on how I use them. So with this diagram here, the first thing we look for in a bearish order block example is a sweep of a high. The next thing we look for is a break of structure down. This is when our order block is valid. So where is our order block? The up close or series of up close candles which took or swept this liquidity before the move down. Normally in this area right in here. There are many different ways you can use this. My favorite is the opening price of this candle or series of candles. However, you can also use the wick or the mean threshold. We will get into that into our examples. Similarly, with the bullish order block, we want to see a sweep of sell side before breaking structure up, and then identifying the series or single down close candles before they move up, and that would be our bullish order block. I also want to discuss what I consider to be a high probability order block and a low probability order block and how I use each. So with high probability order blocks, such as these with large candle bodies and small wicks, I prefer to use the opening price of this candle. Similarly, with a bearish order block, I would use the open here. Now, with order blocks such as these on the right, that is when I prefer to use the wick or the wick to the open. So for example, on this bearish order block, I would use the wick to the opening price, and that would be what I would use. Generally, I only use the low probability order blocks when we are either in a downtrend or uptrend, and that is the only up close or down close candle in the range. I will then use the wick to the open of that candle, and that will be my point of interest or entry. So now that you understand the structure and what we are looking for, let's move to the charts and find some examples. For our first example, we are going to be looking at an example of a bullish order block. So we are on the 5-minute ES chart here, and we will replay price. So if you can see, we are moving down. We just broke this low. We want to see if we displace below it or if we come back into the range. As we continue ahead, you can see we are coming back into the range. So this is considered our liquidity sweep and our displacement. So if you look, where did we break structure? Right here. So where is our order block and is it valid? The down close candle on the move that swept the liquidity before the break of structure up is this candle right here. Now some of you may be asking, why not this little candle right here? I want the big full-bodied candle on the move down that swept the low. So marking this out, this is the order block I am interested in, and I would like to see it support price. So as we continue ahead, you can see it supported price, and we get another leg up off of this area. For this bearish example, we are going to use the NQ 1-hour chart. So if we're looking at this high, did we sweep buy side? Yes, right here. Now, did we break structure down? Not yet. So let's skip ahead. And there we go. We break our structure down. Where would be our up close candle on the move that swept liquidity before breaking structure down? Right here, the open of this candle here. So ideally, as we play ahead, we should get a move or have price be resistant to that area. Another way I will use order blocks is when price is trending and there are down close candles in that move. So for example here, we have these two down close candles. Here I would look for price to be supported in here. Now why choose that or that candle versus this one? Well, if you move up a time frame, that becomes a single candle. That is why you get these series of candles and not just a single candle. Going back into price, another thing I will look for is when we have these single small bodied candles here, and I will do the same thing, looking for price to be supported by that. And you can see price is supported by that, and we get a move higher. For our last and final example, we are going to run through some price action and showing you how when price is moving in one direction towards a higher time frame PD array, it is likely to respect bullish or bearish order blocks along that range up. So for example here, we sweep this low, come back into the range and break structure. Here is the low being swept. Here is our break of structure right here. And here is our order block. Now, as we move higher, we'd want to see displacement up into this area before returning to the fair value gap and order block. So there we go. We reach up into, you should be able to see it now, our bearish order block right there. Swept this high, broke structure down. Now we want to see if we return and get supported here. There you go, you can see we drop down and price does get supported by this order block. Now as we go higher, where is our next order block? You see this large down close candle that swept this low. Before I move higher, I want to see price being supported here. And you can see how it is being supported. I went a little ahead of myself, but as we reach higher here, we have a down close candle into a fair value gap. We would want to see this be supported as well, and so on until you reach your higher time frame objective. I would say experiment with the open versus the wick and single versus series and figure out what works for you and what you enjoy the most. The last thing I'm going to cover is what is the mean threshold of an order block. All it is from body high to body low, a 0.5 fib of that area. So instead of possibly using the open of this order block, as we showed in the last example, you can look to enter on the mean threshold, which you can see worked fairly well right there. The reason I find benefit in using the mean threshold is using my entry on the open, I would have to have my stop here or at the low, versus with the mean threshold, you can see my stop size reduces from 3.5 points to 1.75 points. I hope you found this video helpful and useful. If you have any questions, please leave them in the comments below and I will do my best to get to them as quick as I can. For those of you interested, I did make a separate channel for backtesting. I will leave a link in the description below if you are interested in checking that out. I hope you have a good one. See you later.